Good afternoon and welcome to Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. And joining me live at MarketSite all the way from sunny California is Bob Lang. He's the founder of Explosive Options. Nice to have you here in New York with me.
Great to be with you, Jill.
All right, it's like the street reunion here today.
Yeah.
Over at the MarketSite.
Yep.
But I want to focus on with you, because I know this is what you guys do in the Explosive Options chat room, is momentum trading and using option strategies to momentum trade.
Right.
So give us a little bit of background with that.
Well, we generally try and look for equity options, although sometimes we'll go with index options like the SPDR or the IWM, which is for the Russell 2000, or even the Nasdaq QQQ. But we generally like to find equity option names, you know, like the regular names, the run-of-the-mill ones like Apple and Amazon and Google. And
nice and liquid. And
very liquid options,
too
right.
crazy spreads.
Right,
Yeah.
and we take advantage of the fact that the volatility is low right now. We've historically low volatility for the past several months, right? And we're about 9–10% range in volatility. That means that options are cheap, right? And we generally try and find options that are much more at the money with the with stocks. And so when you get a big boom like we are today with Google or with Amazon or Microsoft or Intel, those stocks are rocketing up, 10–15% today. You get some great movement on those options.
Let me ask you a question. Why use options instead of equities to day or swing trade?
Oh, great leverage. With options, it could be great leverage. I mean, we see Amazon hitting about $1,100 a share today, something like that. New all-time high today, right? And if you could buy some options, you can put a relatively small amount of risk on the table versus having to buy the stock. I mean, look, if you want to buy 100 shares of stock, right, it's going to cost you, what, $110,000 for that. But who's got that sitting around? But if you wanted to control 100 shares of stock with options, you just buy one option, and you can put far less up than having to buy the stock.
All right, and let me ask you a question. When you use options to momentum trade, what are your parameters around that? Are you looking for a certain percentage to the up or downside, or are you looking at technicals to help you determine your entry and exit points?
Exactly right, and I use the technicals, use the charts to help me find my entry points, and they also help me give me my exit points. However, risk management is the #1 rule when it comes to options trading, or it should be for any investor of stocks or bonds or options or any particular instrument. But I'm looking for good returns on those options. Look, I mean, a 25–30% return is great. You keep doing that over and over and over again, you're going to build a large portfolio.
Singles and doubles.
Over time. Yeah, singles
right?
and doubles. And if you get the eventual home runs, like today. I mean, look, if you're in, say, the 10/50 options on Amazon, which were selling at about $2 or $3 yesterday, they're $50 today. So that's a massive home run, right?
But you're not always going to look for a trade such as that. I mean, a lot of that is luck, obviously. No one expected that sort of pop. But to do it consistently and either make a career out of it or a nice living, whatever you want to call it, you do want to do the singles and doubles and be consistent and do your homework.
Absolutely right.
That's, it's very easy to follow along what you see on social media and so forth, but at the end of the day, you're pulling the trigger, and I think it's so important to combine your fundamentals, your technicals, what clues you're getting from the options market. That's
correct. And on the flip side of that, what we talked about just a moment ago, how option volatility is low and option pricing is cheap. You also want to be able to put on some protection. And there's no better time to do that when volatility is low. Options are cheap, which means that even buying some put options, just in case something happens. Look what happened earlier this week, right? We had Wednesday, we had a big drop right off the bat. And if you had some options on, some put options on, you protected yourself, even though the market did bounce back, and it was up a little bit yesterday, and of course it's roaring today. You put some protection on, and it's just like insurance. You have fire insurance, you have health insurance, car insurance, homeowners insurance, all those things just in case a disaster happens. So it's always good to have some protection.
I interviewed someone earlier in the week, and he's like, you need to think of options as not buy and hold, but buy and hedge.
Correct.
And I thought it just tied it all in.
That's right.
Together.
Yeah.
So nicely.
You have to be able to protect what you working so hard to gain. It's like when with the stock market, it's like taking the elevator up, and when you're down, it's like taking a window down.
Right.
It's so fast that you can drop so hard and so fast and lose all the gains that you've been working so hard to cover.
What's the average time frame you think you hold for a position?
Well, for my options, it's about 3 to 4 weeks at the most. Because look, I'm using the technicals, I'm using the charts to give me an idea, gauge the direction of the move for a particular stock. And it's not like sometimes that stock's going to hit right away within a day or two. And I have to manage my risk carefully, right? If I'm up 50–70% on an option, I'd be a fool not to take some of that, if not all of it, off the table. But I'm using the technicals, using the charts to kind of gauge for myself how far that's going to go. But again, managing risk along the way as well too. It's got to wear different.
We could do a workshop on this every week, couldn't we, Bob?
It'd be so much fun, wouldn't it?
All right. Well, thank you very much for joining us.
Thanks for having me, Jill.
And traders, as always, thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.